Welcome to the Roy Morgan Weekly Update. Interviewing for this week's Roy Morgan Weekly Indicators was conducted before the plunge in the iron ore price and before the release of the Defence Strategic Review earlier this week that foreshadowed greater spending in defence. Overall, the results are mixed for the Albanese government. The ALP has increased its two-party preferred lead up 0.5% to 56.5% compared to the coalition on only 43.5%. But government confidence has dropped 5 points to 90.5. That's the lowest rating since last year's federal election. There are now 46% of Australians saying the country's heading in the wrong direction, compared to only 36.5% who say the right direction. There was a slight improvement to consumer confidence this week, with the ANZ Roy Morgan Consumer Confidence Rating up 0.8 points to 78, ahead of next week's Reserve Bank interest rate decision and the federal budget the week after. At 78 this week, consumer confidence has now been below 80 for 8 straight weeks since early March. The last time consumer confidence spent an extended period below 80 was in the 1990-91 recession, when the index, which was then conducted on a monthly basis, spent 5 straight months at a very low level below 80. The latest weekly ANZ Roy Morgan inflation expectations for the fourth week in April were down 0.3% to 5.3%. So Australians now expect inflation to average about 5.3% annually over the next couple of years. Inflation expectations have now averaged 5.4% over the last 4 weeks of April, down from the 5.6% average for March. If we ever doubted whether Australians had any idea about future inflation, we should doubt no more. The fall in Australians' inflation expectations averages so far this year have been validated by the latest ABS CPI figures released today. The important ABS March quarter CPI was at 7%, down from the high of 7.8% in the December quarter 2022, and the fall in quarterly CPI was matched by a continued fall in the ABS monthly CPI, down to 6.3% in the month of March. You might recall the ANZ Roy Morgan inflation expectations peaked in early November and fell consistently throughout the next few months, and now the latest ABS figures have once again followed this trend. The drop in inflation means there's less pressure on the Reserve Bank to resume its interest rate increasing cycle at next week's meeting. On another issue, The Voice, a referendum to establish an Aboriginal and Torres Strait Islander voice to Parliament. In December last year, Roy Morgan reported 53% of Australians supported establishing an Aboriginal and Torres Strait Islander voice to Parliament, known by most as The Voice. In mid-April, Roy Morgan again conducted a Snap SMS survey to find out if Australian views on the proposal had changed, and they have. In mid-April, support for The Voice had dropped to 46% of Australians, down 7% since last year in December. Now 39% say they'll vote no. That's up 9 percentage points, and a further 15% are undecided. Looking at support for The Voice by party affiliation shows support among ALP and Green voters is virtually unchanged since December. 75% of ALP voters and 89% of Green voters support The Voice, still overwhelming majorities. In contrast, support for The Voice has dropped for all other voting groups. The Liberal Party's announcement that they'll be formally opposing The Voice in early April has certainly had an impact, with support down significantly for Liberal and National Party voters. Now only 6% of coalition voters support The Voice, down 9 percentage points since December. Support for The Voice has also dropped amongst One Nation voters, independent voters and voters for other parties. Traditionally, Australians only support referendum questions that have bipartisan support, which is a major challenge for this referendum. Support for the Voice has dropped amongst both women and men, and for all the key age groups compared with December. However, the most important demographic break for any referendum is the result by state, and support for the Voice was down in every state around Australia compared to December. In mid-April, only one state, Victoria, had majority support, with 52% saying they'll vote yes to the Voice. Support for the Voice was still the most likely response for people in New South Wales, Western Australia and Tasmania, i.e. more people said yes than no, but support was below the crucial threshold of 50%. Most worryingly for supporters of the Voice, there were more people opposed to the Voice in both Queensland and South Australia in mid-April. For any referendum to pass in Australia, a majority of voters nationally, as well as a majority of voters in at least 4 Australian states, must vote yes to the change. This double hurdle is a key reason that not many referendums have passed in Australian history. And now turning to a pressing issue for many Australians, mortgage stress. Roy Morgan's the only company that measures mortgage stress every month, and the latest Roy Morgan mortgage stress figures are out for March 2023. And the news is not good. Well over a quarter of all mortgage holders, 27.1% to be exact, are now considered at risk of mortgage stress. This is the highest rate for over a decade, since November 2011. In addition, and even more concerningly, almost 1 in 6 mortgage holders are now considered extremely at risk, 17.3% of all mortgage holders. This figure is equivalent to 835,000 mortgage holders. These figures are concerning enough. However, the prospect of further interest rate increases next week, and perhaps in June as well, will increase these figures significantly. Although the reduction in inflation revealed today does lessen the chances of consecutive interest rate increases in the next 2 months, it's by no means a certainty. Roy Morgan also forecasts the level of mortgage stress in the months ahead based on projected interest rate increases, essentially assuming everything else is equal. What would be the mortgage stress if interest rates increased? So if the Reserve Bank decides to increase interest rates by 0.25% or 25 basis points next week, this would have a significant impact on mortgage stress, increasing the number to over 1.5 million mortgage holders at risk, or over 30%, 30.5% of all mortgage holders. Another interest increase of 0.25% in June would increase this close to 1.6 million mortgage holders, a record high. So these factors need to be on the Reserve Bank's mind as it meets to consider another interest rate increase next week, especially if the other indicators, like Roy Morgan's Inflation Expectations Index and the latest ABS CPI figures, show the inflationary pressures in the economy are reducing. And that's a wrap for this week. Subscribe free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thanks for listening today, and I look forward to bringing you the latest data on consumer confidence, inflation expectations and voting intentions next week. Take care and see you next Tuesday.